A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a dramatic turn of events, the White House has clarified that President Donald Trump's tariffs on Chinese goods are significantly higher than previously reported. The actual cumulative tariff on Chinese imports is now confirmed to be at least 145%, rather than the 125% touted by the president. This revelation comes as the stock markets react negatively, continuing their recent decline. Following a period of uncertainty, the Dow Jones Industrial Average plummeted nearly 1,500 points before managing to recover some losses by the afternoon. The confusion arose when Trump initially announced a 125% tariff on Chinese goods in response to Beijing's retaliatory measures against earlier tariffs. However, the White House later explained that this figure does not include an additional 20% tariff already imposed under an emergency measure aimed at combating fentanyl trafficking. I am hereby raising the tariff charge to China by the United States of America to 125%, Trump stated in a social media post. This announcement, however, failed to account for the existing tariffs that have been levied on Chinese goods under separate laws, leading to the higher cumulative figure. As share markets continued to tumble, Trump faced questions regarding his tariff strategy during a cabinet meeting. He downplayed concerns over China's decision to limit the number of American films allowed to be screened in the country, responding with laughter from his cabinet members. When asked if countries initially subjected to a 10% tariff, including Australia and the United Kingdom, could negotiate lower rates, Trump indicated that negotiations would depend on the specific circumstances and what those countries could offer in return. He emphasized that the U.S. has varying trade relationships with different nations, stating, "Some countries we have massive deficits with, or they have big surpluses with us, and others it's not that way, so it depends." Historically, the U.S. has enjoyed a trade surplus with Australia, but recent data from the Australian Bureau of Statistics shows a deficit for the past 2 months. A significant factor contributing to Australia's surplus of $1.1 billion in February was the surge in gold purchases by American investors, driving the price of the precious metal to record highs. Earlier this week, U.S. Trade Representative Jamieson Greer expressed the need for the U.S. to run up the score on Australia, despite the long-standing trade surplus. In an effort to reduce the overall annual goods trade deficit of $1.2 trillion. He criticized Australia for not accepting U.S. beef and pork, despite the country's willingness to import beef products from cattle born, raised, and slaughtered in the U.S. However, Australia has not approved imports from cows in Mexico and Canada, which are part of the U.S. supply chain. The Department of Foreign Affairs and Trade has yet to respond to inquiries about whether Australia has formally reached out to the U.S. administration to restart negotiations. With the Australian government currently in caretaker mode due to the upcoming federal election, the future of trade negotiations remains uncertain. Meanwhile, Trump's allies continue to praise his tariff strategy as a successful maneuver that has compelled other nations to engage in negotiations. Commerce Secretary Howard Lutnick took to social media, declaring, "The golden age is coming. We are committed to protecting our interests, engaging in global negotiations, and exploding our economy." As the situation develops, many are left wondering how these tariff changes will impact global trade dynamics and whether the U.S. will see a shift in its economic relationships with key partners like Australia and China. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.